Futures point to a flat open in front of retail, same-store sales, and jobless claims. The earnings calendar is still busy, but investor attention will be focused on the employment situation report this Friday. I'm Taylor Schranz, and the morning call starts right now.
Good morning, everyone. I'm Evan Lazarus with T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the Morning Call Express. Evan, we have a big day on tap today. We've got a lot of earnings going on. We have the initial jobless claims, but you know what? That all-important ADP number is on every trader's mind this week. Let's take a look at the action over the past 3 days in the S&P.
All right, so let's do that. The S&P, this market is a little manic. We've gone from a weak market. It wasn't just more than about a week ago. We look like we were heading lower. You can see the market here looking like it was about to go lower. All of a sudden, divine intervention, and we're back to highs once again. I think this move caught a lot of traders off guard, as I know a lot of traders were preparing for lower prices. What we really have here, when it comes down to it, is if you see the moving average here, which is the 21 MA, it's flattened out, and a flat 21 means basically a trendless market. So what we're looking here is we want to see how price reacts at prior highs. Just like down here at prior lows, you can see how it held support. And this is very common with a flat 21. You'll see, equal highs and equal lows. It's what we call a trendless market. So we need to see, how price reacts tomorrow. If we can push through highs, maybe, some new buyers will step in and we'll see another rally leg develop. Right. But right now, we're sort of cautious, and on the sidelines here with the market overall.
Okay, moving along to the sector spotlight, we're going to take a look at the auto names. Believe it or not, these are names that usually you're not in and out of in terms of being a momentum trader, but with auto sales yesterday, and GM just printed, they beat the numbers, but they had a big drag in Europe and a big one-time charge. So we're going to look at Ford, GM, AZO, and a bunch of the other auto part names. But for the Morning Call Express, let's take a look at GM real quick.
Okay, let's look at GM. I know GM reported earnings this morning. We can actually get a real-time snapshot here of earnings. We'll just look at what's going on real time. And it looks like, the initial pop off the earnings report, we saw a spike move up to about 24.5, but now back down to 23.30. So this is sort of anybody's guess right now. It doesn't look like it's going to be a grand opening for GM. We can go back to the daily chart, which in a nutshell, has been slowly, declining, a little bit of a downtrend setting in. You can see our key moving averages here pointing lower. You can see every pop has been sold over the last couple of weeks, and there's not much support down here in GM until the lower 20s. So I would be on the sidelines here. I don't necessarily know I'd be a buyer of GM.
Okay, and actually, guys, my apologies on that. I switched that up. We're actually looking at the autos and the auto parts for the trenches. In the sector spotlight, we're going to focus on the refiners. There's a ton of news out there. We know that ConocoPhillips split off the refining business. Now Phillips 66. We have Delta actually buying a refiner from Phillips 66, which I think is very interesting. That's going to be, we're going to see how that plays out for the next 5 to 10 years, because Delta is going to refine 75% of their own fuel. It's a big undertaking for an airline company to manage. There's just so many metrics involved with being in the refining side of the business. So let's take a look at Conoco real quick.
Refiners, and we look at Conoco, it's just really not a space of health right now. I wish I had something better to say, but we have to respect what price tells us here. And price, as far as Conoco goes, breaking lower. You can see yesterday's nosedive with volume there on that news report. So the market really not liking this. We do have to respect, prior support levels down here around 52, 53. We'll see what price reacts, but it looks like we are beelining for this area, and it looks like lower prices are not too far ahead.
Okay, in the long call version, we're going to take a look at quick hits for some quick cash. Before we wrap up the Morning Call Express, Evan, let's look at Apple.
Apple.
Everyone's favorite.
Everyone's favorite. Apple, for the first time, I can tell you that it has been underperforming. While the market has been sitting at highs, Apple sort of languishing. We saw that one massive gap up on earnings that has done nothing but go down since. We have an open gap here for those that are really more technically inclined, down to around 550, 560 area. That's where the gap gets filled. To me, this just looks like it's taking a little bit of a rest here, maybe a 1 to 2 day pause, but it looks like it's going to make an attempt to try and fill this gap. So I would be, looking, if you're an active trader, it's been a great active trade on the short side. If you're an investor, you could probably wait for lower prices if you want to step in.
Okay, thanks very much, Evan. At the end of the day, catch up the T3 Live team as they wrap up the charts on options, profits, real money, and T3Live.com.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.